Hello and welcome to the Be Formless Flow Driven CEO and VC podcast, where we are reshaping life, leadership, business and investing from the inside out. And today I'm welcoming to the show Oscar Ramos. Welcome to the show, Oscar.
Great pleasure to be here, Rena. Thanks for the invitation.
No, thank you. I know we've got a little bit of a Wi-Fi challenge. We'll see how we go. So a big shout out to all the listeners. Happy Monday. Hope you all had wonderful weekends and are ready for an action-packed conversation with Oscar. Oscar, where are you at the moment? Are you in China? Whereabouts in China are you?
I am in Shanghai right
Ah,
now, calling from
yeah.
downtown with a big storm and some connection issues here.
Yeah, we've certainly tried, haven't we? I think maybe this is our fourth or fifth time, and every time the connection gets in the way. So let's just give it a whirl and off we go. I've always been really excited to talk to you because you're working in a very interesting place and space when it comes to emerging markets. And when I met you, gosh, quite a few months ago, we had a really robust conversation around that and the differences with, traditional VC ecosystems in established markets versus the emerging markets. You're the managing partner at Orbit Ventures. You've got a great T-shirt going on. Well done on the branding. I'm all about the branding. You need to bring your T-shirt up a bit and show us your
Yeah,
yeah.
I'm trying to work on it. Try to make sure that the audio is good.
Yeah, it's good. Yeah, good
Yeah,
branding. I need to get a Be Formless cap, I think. It's kind of on my list. You've spent more than 2 decades exploring a question that sits at the heart of venture capital, and that is, what is capital ultimately meant to create? Having a lot of conversations around that. Throughout your career, you invested in founders building at the intersection of technology, infrastructure, and economic opportunity, with a particular focus on emerging markets often overlooked by the traditional venture ecosystems. And an important shift emerged along the way. And so rather than viewing venture purely as a vehicle for growth and financial returns, Oscar, what became increasingly interesting for you was how capital can modernize essential industries, strengthen the local economies, and expand opportunity at scale. So today, as the managing partner at Orbit Ventures, you back companies transforming the real economy through technology, helping build the foundations for more, you say resilience, I say more anti-fragile, connected, and prosperous futures. I love that. Your work reflects an ongoing exploration of how venture capital can move beyond funding innovation to become a catalyst for meaningful and lasting transformation. And ultimately, at the heart of your perspective sits a simple question, and that is, what becomes possible when capital is measured not only by what it returns, also by what it helps create? Tell us a little bit about your journey, because you've been in the emerging markets for quite some time, right?
yeah. When I was I'm from Spain originally, so I'll say for most measures not an emerging market, but with a very natural connection to Latin America, and that's why my journey started. So when I was graduating, I was involved in an organization called Engineers Without Borders, building technology across emerging markets, and not just bringing old technology, just also trying to develop and work on R&D. That's how everything started. So through that, I got even more involved as my graduation thesis, where it was a life changer because what I did is I used space technology, something that was designed to power the internet of the future between planets, to address challenges of connectivity in rural areas of emerging markets, to enable education and healthcare projects. No? And that had a lot of things in common in it, no? Because it has technology that was very advanced, that had an economic, because the goal here was not just to build the technology, was to prove that economically it was actually better and more viable. So that angle was very important. And then on top of that, making sure that technology was there to to address the needs of the users. No, so you can have like the technology, the economics, and the value all combined in a single thing.
Yeah, right. And so then how long ago did Orbit Ventures start? Like, when did you come into Orbit Ventures? You and I have talked about the traditional VC ecosystem. You see that you see an opportunity to revolutionize it. You talk a lot about, meaning and catalyst for change and transformation and everything else.
So
How
actually,
did Orbit Ventures come about?
Orbit Ventures is an evolution of a previous organization. So Orbit Venture was incubated inside the SOSB consortium and was still part of the
Yep.
SOSB consortium,
Yep.
where the founding partner had that vision of technology for human development at different areas. And it's a long story short, but eventually Orbit evolved into becoming that engine specific for emerging markets, where software transformation, data transformation, is where you can have the quickest, fastest, easy to measure ROI. So that is something that is quite important because what I learned very quickly when I was working even back in the day is that the time to return on investment, the payback time, is quite critical to be able to make sure that you can accelerate the proof of, okay, this is something that makes sense, is this profitable, so we can bring in more resources and then you can scale. I think that's what I see in many of the initiatives in emerging markets, is that they miss that idea that at the end of the day, if you really want to make things grow, you need to make them economically viable. So it doesn't just become a nice to have thing where people is able to do a bit more like philanthropic. I give some of my spare change to that, but something that becomes a real opportunity that doesn't need necessarily to compete with to challenge anything in other types of asset classes. No, so that has been the idea,
Yeah.
and that's
And when you
what the study.
Yeah, and so when you say economic viable in an emerging market, like what is it like? What's required? Obviously, there's the business, there's the founder. Like, what does it take, or what is required when it comes to it being economic viable versus a nice to have?
Well, I mean, when you say economically viable, the first thing that people comes to mind is like, okay, this is going to break even. So this is going to be economically sustainable. But when you're economically sustainable, you're able to attract limited resources because most of the capital that is looking for investment is looking for returns. Like most of us, when we have like our savings and we have those savings into something safe, some safe investments, we will be looking for, okay, what's the return? And some will say, oh, there's this option where I might have lower returns. I still looking for a return, okay, but lower returns. But I know this is going to be a bit more ethical, no, because
Yeah.
short term, if you discount the cost on environment and society, only financial returns could potentially be more profitable. But I
Mm.
said could because I think we've been able to prove that there are certain types of companies that if you change the framing and the way you look at them, they can actually be even more economically viable. And this very clear possibility to do really well by doing good.
Yeah, I like that. I like the way you call out, excuse me, doing really well by doing really good. Tell us a little bit about doing really good. Like, what does doing really good mean in an emerging market?
Well, I mean, there's different types of investments, no? But in the area where I operate, there's mostly two areas that are very relevant. One of them is venture capital, which is equity investments in private early stage companies, um, because the cost of operation is lower, and in general, there's a big opportunity. You can actually generate companies that will create substantial value for shareholders with low cost of investment. Then the key thing here is that you need to change the optics because the cost is lower, the competition in general is lower and is very fragmented. You don't need as much capital. So you can actually generate good returns with lower base because you don't need massive exits. You don't need unique to be able to generate good returns. And if you run things in the right way, you can potentially increase the percentage of success. So that's one of the areas. The other one, which is a bit more, is easier because the problem of equity is that it takes long time to be able to show results. But what has been very clear is the private credit or investment into lending that proved to be really solid. So in most emerging markets, low trust environments, access to credit is very limited and very expensive. That doesn't mean there's no people that is reliable and will be able to return. So because the cost of credit is so high in some parts of the, like, you can go like legally. I'm not talking about like street like loan sharks. I'm talking about legally. We're talking about 25-50% that you can get from a reputable bank. That's a lot. And if you're able to add a layer on technology there, that technology can reduce the risk and improve the whole process, then you can actually have easily like a 10-12% return, which is significantly higher than what you can have in a developed economy. And at the same time, you can address a really massive problem of society, which is access to credit. Access to credit that can be used for assets that people can use to be able to get a job. So if you own your own motorcycle and then you can do deliveries, that will increase the income of a family massively. If you can own your own tools as a contractor, you can also increase your individual income. If you can support micro enterprises that or micro businesses that they're limited in what they can do by getting access to some working capital, they can increase their revenue. And as they increase their revenue, they're also providing more services to society. So you make access to more needed products and services easy. No? Like we have a case of a company that I think is super interesting. It's a company working with micro like corner stores. So in most emerging markets, access to essential products happens through these small corner stores. I'm talking about 95% in
Yeah,
places like
right.
Bangladesh or South Asia. So those stores are critical so people can have what they need, like cleaning products, food products,
Yeah,
medicine,
essentials.
etc. So it's super critical. But those stores, they run on pen and paper, so they're inefficiently run, and at the same time, they have no record of how reliable they are. So this company adds a layer of software where they become more efficient by using a mobile first, very easy type of system to manage the store. And because they keep a record and that record is auditable, then you know what stores operate properly and you are able to give them credit. If they give them more credit, their business grows, but more people get access to things. So these problems of like, I wanted to buy like some flour, but there was no flour. Or I wanted to buy like cooking oil, but no cooking oil. You reduce these problems and people has more access. So inefficiency is the only loser in this case. Everybody wins.
It's incredible, right? In terms of the emerging markets that you're playing in, which emerging markets are you actually like? Is there like a whole lot of markets that you're playing in? Like, where is your central, emerging markets? I spoke to someone else in VC just recently from an emerging markets perspective, and it was fascinating what he was sharing with me. And it's also really super fascinating what you're sharing. And I have quite a few questions in terms of, he was talking about the future and obviously with AI and everything else. And from an emerging perspective, like even what you're talking about here, there's almost so much opportunity from a future perspective, but there's also then bringing forward like essential items that you think like in the world I live in that you would you just expect it, right? And yet in the emerging markets, so it's interesting because there's almost like this emerging and then there's also catching up market as well, if that makes like, do you see that? Like, yeah.
Yeah, well, we have I think we have a unique perspective because very few people, very few organizations have an exposure across Asia, Africa, and Latin America. So we're covering like Asia. Where I mean, I do think that Far East Asia, like China, is a bit more advanced, and in many aspects they have leapfrog areas where developed economies are even less advanced. No, like mobile payments, for example. But Southeast Asia, South Asia, Central Asia, West Asia, which is a huge amount of population. That's one area where we operate. Africa is another area where we operate. And then Latin America, in many aspects, still a very relevant emerging market. So we're able to learn a lot from the markets because we have companies from Latin America in the AI space expanding to India. And that's surprising for many people. But it's not what you need for success is not just good technology. You need more. You need an understanding of the challenge. And you have cases where Latin America can be companies understand a challenge that is still less developed in India. And at the same time, you have Indian companies expanding to Latin America or to Africa. So there's a lot of collaboration between the markets
Yeah, I love
from that
that.
point of view.
Yeah, because Oscar, you did mention to me weeks and weeks ago, like, a lot of people have this, it's almost like a misconception that you can just come into an emerging market and do what you've always done in previous markets and just, and what you're talking about here is that it's very bespoke. You need to truly understand how these emerging markets actually work. You can't just expect to come in from a traditional market or a market as we know it and replicate the model that was created in a different market. Tell us a little bit about that, because it is quite interesting what you're talking about here. And quite often, it's that cookie cutter approach, right? Where we think
Mm.
we can come in and create what we've already created before. And then guess what? It doesn't work. And it's because we haven't listened. We haven't done the research. Tell us a little bit about
Yeah,
that.
I'll say that in most cases I see that kind of like a behavioral belief. Most of people coming from global north, in many aspects is significantly more developed than emerging markets. They're already developed versus developing, um, and um, that's where I see a lot of cases where people tries to use the same approaches, but when you arrive to the market, they don't work because the infrastructure is different. The talent, the roads, the ways of doing things, the informal organization is so different that it will simply not work. When you do the same thing across emerging markets, on one side, I think once you acknowledge the fact that they're different, I think people knows, okay, everybody is different, no? And every time I go to a market like relatively large, they will come and say, no, because it's different. Like here is different, and they will even talk about, no, because North Nigeria versus Southern Nigeria is so different in many aspects, and I don't disagree. There are differences, but I think where the opportunity is realizing how many things are there in common, because you don't have to reinvent the wheel. You don't have to do everything. So we've learned a lot on how to operate in Nigeria, recycling our experience, learning in Pakistan. Does everything copy paste? For example, no, it doesn't. It's not going to be 100% copy paste. But if you're able to go there with open mind and say, look, some things will be the same, some things will be different, and you use a different starting point. You used your experience in another developing market than like North America, Europe, or like that will change completely everything. And that's I think where we have an edge, because when we invest in six companies with the same business model operating in different emerging markets, we see what's different, we see what's the same, and a lot of these similarities we can utilize them to support other companies, and we also can utilize the learnings about the differences to again support on the different specific unique approach of that market.
Yeah, you're continuously, for me, it's like you're very formless. You're continuously shaping and reshaping. You're learning, you're removing what's not, what's not required. And then you're almost like reshaping it or creating it to then test it out in market. And it's a continuous model that is continuously evolving. How different, are the founders in emerging markets? Like, do you see there is a like to that you talked about edge before, you mentioned the word edge, we have a competitive edge, if you like. What do you see as the edge of the founders in these emerging markets?
So I think there's two. I think for me there's two very different types of founders in emerging markets. Founders that are educated and have initial work experience in developed economies, and founders that are more grassroots, like founders that are born, grown, worked, and all the training has been a bit local. Both founders have strengths. Both founders have weaknesses. But I think in general, the local founders are a bit more aware of their strengths than the founders that grow and educate themselves and have experience locally. They're a bit more aware of their strengths than the founders that come with a global expertise. Because like when you come with a global expertise, you've learned the best practices from top institutions in the world. You maybe work for top companies, and you expect that to be the global standard. But when you
Yeah.
arrive in the markets, that's not the global standard. Like the people that you're going to be training, you're recruiting, and you don't have the talent that you're expecting. You are like working with people and managing people, and they react differently to training, to incentives, to their own motivations. That creates a big issue, and it's challenging because you might be aware of the culture from a family perspective or relations perspective, but the workplace culture is different, and that creates a bit of a challenge. And that obviously gets not just at that stage, that gets also at the customer space. Like how do you understand? So to understand your customer and you walk on your customer's shoes, you need to first remove the ones that you come with, and that's kind of the challenge that I see. So those founders in general, we work more with founders that are more local. I think that the valuable thing that we bring is more valuable for them, and they're very aware of that need. And I see those founders with a lot of commitment and a lot of grit. I mean, they're really trying to get something big. And sometimes when people talk about impact, they don't understand. It's like, look, I'm just giving people things that they need and charging a fee so I can make a profit, because otherwise I cannot continue growing. Like I cannot rely on donations or something else, because what happens if the donations stop? Then my whole operation will collapse. So I need to build something that is sustainable. And if I don't make it attractive enough, I will not be able to get access to more resources, because the resources for like that are not expecting for a lot of return, or that are willing to take a lot of risk, are very limited in these markets. So like majority of the capital comes from abroad for very early stage VC.
Yeah, interesting. Tell me a little bit around, like, I mean, I think about emerging markets, right? And they're emerging. There's, there's emerging complexity. Everything feels like it's emerging. I keep saying this on the daily because it is. At what point does a market, like the emerging markets you're playing in, stop being known as an emerging market? Is there like a time frame? I've never asked this question before. Like, or is it a continuous emerging market? When do they become as established as the markets that we know, like, from the US, even like Australia, for example? At what
Well,
point is there a point?
yeah, there is a point, and I think that organizations like World Bank, they have specific ratios that they use to define when a market goes to like developing to developed. Okay, but I think, just to give you an idea, I think China recently left like this year, last year, left the developing market tag or label, as where they are. So, but inside, the key is that inside developing markets, you do have subcategories. So sometimes we talk about developing and frontier markets, or there's even like a type of markets where there's like a more fragile economies or distressed economies, conflict impacted. So there's different cases of or risks that exist in markets, the composition of society. So there's a different organizations that will create rankings or ratios that will classify those markets, and but again, that will be sometimes surprising, because you have a market like Kenya that for many people is like clearly an emerging market, but Kenya is a market that has a 95% penetration of mobile payments, which
Yeah,
is
I was about
something
to
that
say, like, that's what kind of blows my head off, because some of these markets have not gone through, the industrial revolution, if you like, that we have, some of our markets. And so, like, you talk about mobile payments, they've almost skipped almost a revolution, and
yeah, but
yet
that
it's still emerging, which kind of like, it's really hard to get your head around sometimes, because you think, wow, like, they're still emerging.
no,
It's like
they're
they're
still
almost
emerging.
pioneering markets. Do you know what I mean?
But
They're like, that's what they feel like.
company, I mean, markets don't they don't grow organically. They don't grow like a in a balanced way across different areas. So some areas might grow faster, and in some cases, the reason why mobile payments have a better penetration is because simply they are a better technology for today. So
Yeah.
in some developed economies, we have legacy, and that legacy is very difficult to change. Once everybody's used to use credit cards, and their credit card works okay because they address many of the issues. You have ATMs across the world, across the country, etc. Why would you make the change? That doesn't you're is not something that you need. But when you have nothing, and something comes, you can skip. No, that's the same thing
Yeah.
that happened in. So I experienced that in China. I experienced that in China, where I went from like not being able to pay with credit cards almost anywhere to have mobile payments available, and that kind of generated a huge kind of foundation for innovation of financial services. But you have the same on transportation, and transportation, including like share economy type of solutions, where car ownership is not as necessary because it doesn't add as much value, and you also have like electric power, like a fleet for, because it's simply easier. Like it's easier, cheaper to create a distribution network for power, for electricity, which more or less it's very many parts of the world, and then have to create like gas stations, and the maintenance of car is cheaper, and the operation of a car is cheaper. We're talking about a 10 to 1 from an
Yeah,
operation
right.
perspective.
Yeah, it's
It's more
huge.
expensive. They are more expensive to buy, but and particularly right now with the situation on oil prices being unstable, like being able to leverage alternative sources of energy for production of energy becomes significantly more resilient for organizations,
Mm.
for
Mm.
countries.
Is that what you mean when you booked in for the pod and I asked you what's one unique insight or lived experience when it comes to reshaping business, investing, leadership? And you mentioned you've been working to reshape how venture capital engages with emerging markets, moving from a purely growth-driven model to one that blends returns with real economy transformation, backing those startups to digitalize essential industries and expand opportunities at scale. Is that what you're talking about here when you talk about real economic transformation? What we were just talking about then? Like, is that what you mean? Like, when you talk about
Well,
real economy transformation?
no, no, I'm talking. I mean, this is real economic transformation, but what is? I mean, many at the end of the day, the key sectors that are going to drive the economy are going to be the same. But if those sectors operate in a very inefficient way, they're going to be always less profitable. So if you look at agriculture, agriculture represents in most of the emerging markets more than 50% of the employment. A country will not be able to transition to a more resilience with consumption-driven economy unless they are able to increase the salaries
Yeah.
and the income of the individuals. So if the farmers, because the inefficiency of logistics is so bad, if the farmers do all the work and then 50% of their produce is lost on post-harvesting due to inefficiency of these logistics, that's that's a massive loss. If
Yeah.
you're able to use technology to drive more efficiency and reduce that to like from 50 to like 4 or 5%, like some of our companies are able to do, you're automatically giving those farmers in one harvest with very low risk a 50% return, extra return in their earnings. Because that's the way it works. They get paid on whatever gets to the market and is sold. If you improve all of these and you start from the end, like that's very tangible and you don't have to wait. You don't have to ask the change that you have to ask the farmer is very you don't have to ask the farmer change the way your family has been farming for generations. You
Yeah.
say, hey, what are you gonna move things differently? Remember that they used to use like animals and now you use trucks, etc. Well, this is another evolution of this. Less risk. Okay. And so with these, you're able to convince them, and then you're able to start earning trust. And if you're able to improve some of the farming techniques, yield, and most importantly, you're able to improve the yield without compromising the future, because some of the
Yeah, which is awesome.
the fast tracks, they actually produce more, but they have a toll on the environment. So in 2-3 years, the land will not produce the same because you
Yeah.
burn it. So you
Yeah.
need to use like this type of more um, sustainable agriculture. Sustainability sometimes has a negative connotation. Sometimes I joke that in emerging markets, the first rule of sustainability is we don't talk about sustainability, because when you say sustainability, people will assume it's going to be less productive, more
Yeah.
expensive, and experimental.
Yeah.
And it's like,
Interesting.
well, no, no. I have kids to feed. I have family to take care of. I want a future for them. I'm not going to play
Yeah.
with that.
Yeah. Language plays a big role. Two final questions for you. What would you say is the biggest inflection point that the emerging markets that you're that you work within is facing right now, just with everything going on in the world? What would you say is the biggest inflection point?
I think liquidity is the major challenge. Access to capital and resources. I'm not talking only for startups. I'm talking overall for these markets. I think that's a big challenge that many of these markets are facing. So particularly for my sector, like local domestic companies should have more resources so they could start acquiring some of these
Yeah.
startups.
Yeah.
That will make those, because startups have a capacity to build something, but there's many networks that they will take years to build. And there are
Yeah.
existing companies that already have those networks in place. So working together, that could be quite
Creation.
quite a good
Yeah.
way to scale that impact even more
Yeah.
and
And
create
then
more
my last
economic value.
question, women founders, women in VC, it's a challenge from a global perspective. What opportunities are you seeing in emerging markets when it comes to female founders, bringing more women into venture capital? Like, is it as big a problem as it is, in the other markets as well? Like, are you seeing it as much or?
I'll say, this is very politically incorrect, but I'll say that the problem here is even worse, because I think the challenge in many of the emerging markets is that the problem is at the bottom of the funnel. Is not that you don't have people. It's like what pool of candidates do you have to
Yeah,
choose?
right.
And when there's a restriction on the number of women or girls that go through education, to basic education, like higher education, etc., they might have the talent, but they don't have the training and they don't have the capacity. Then you have a lot of programs that are trying to address this problem, but instead of trying to solve the problem at the root, which is where the problem is, in my opinion, they try to solve the problem at the top, and they try to put women in positions of leadership where they're still not ready.
Yeah, they're not trained.
Generally,
Yeah.
they're
Get
not
it.
trained yet.
Yeah.
It doesn't become a meritocracy because sometimes objectively they're not the best candidate, but there's still this positive discrimination, which I think in many cases is necessary. But that creates very negative attitude across men that say, look, it's not the best person. And that creates
Yeah.
situations where startups will bring a co-founder, which is a silent co-founder that they don't trust, that they don't do anything just because they're women. And so women say, look, it's okay. I get something here and I don't have to do anything. That's okay for me. So I think this is something that is not very good. I think that it needs to be addressed. And I think what needs to be done is controlling, like making sure that women are getting access to the opportunities that they deserve. And we're solving the problem of addressing the challenge. So the problem is there. I think the solutions sometimes are we're trying to develop a solution too quickly. And
Yes.
by putting people unready in positions of too much exposure, we're creating an image that these people is not ready. And there's a correlation. No, it's not causality, but there's correlation. Okay. And the correlation is like, well, these people does not perform okay. So I think, I'm quite involved in many programs because I do believe
Yeah,
that
great.
particularly the women that are able to get there are women that have to work 10 times harder or even more
Yeah.
sometimes.
We need to break
But
this.
so
We need to
we
shift it.
we
We need to shape and shift it. Yes. Oscar, great conversation. I thank you so much. How do we find out more about Orbit Ventures? How do we find out more about you?
Well, I mean, LinkedIn is the best place, but we also have a website. We try to update it as much as possible with the 300 portfolio companies active that we have right now, what we're doing, the events, etc. But by far, LinkedIn, I'll say both Orbit's LinkedIn and my LinkedIn are the best ways to stay in touch and check where in the world I am and what are we doing.
Amazing. And I'll have to get you back on. I feel like I need a group pod conversation around quite a few themes that are coming up. So stay tuned. I will be in touch. We didn't have any tech problems. We were meant to meet today. Thank you so much, Oscar. Have a great week ahead and look forward to staying connected. Thank you.
Thank you, Belinda. Thank you very much, everybody.
Thank
Looking forward to
you.
stay connected with everybody.
Thank you.
Cheers.